Keep watching as I show you how you could have added 5 more trading opportunities to our campaign on Rio Tinto from the start of this year. Hi everyone, my name's Darren Young. I'll be just taking you through a few opportunities that our students have been looking at since January on Rio Tinto, a stock that is listed on the ASX 200 here in Australia and also on the S&P 500 in the US of A. We have our disclaimer there for you to read. Okay, this is Rio Tinto here from the last couple of years, the start of 2024 here, all the way through to the end of 2025. And we're going to look at the market a little bit from June, because we did take an opportunity there that has worked its way all the way through into this year. And then some added trades that we looked at from January. So this was our trade back in August. We used the low in June. Okay, and that's, as you can see, a monthly low. We've got some weekly bars. This is a weekly chart. And we've looked at some weekly swings there. We're using this first weekly swing, and that gives us a profit target of 167.62. Okay, and as you can see, towards the end of last year, the market certainly started heading up towards that target. And that just gives us a framework for any other trades that we might seek to take on this market going forwards. I'm going to head into our software now. So this is profit source. I've got a daily bar chart here, and this was our entry. If I just slide us along, that was the low in June that we were waiting for. Okay, and our students would have many reasons to have picked that low in June, but we don't need to trade the low as such. We can wait for a further opportunity. And we got in here in August as this weekly swing turned up. And I'll just run you through. Okay, and that's the market running through August, September, October. And what we'll do, our stop loss is underneath this swing here. And with this trade, because we thought that was a significant low in June, we're just going to trail the weekly swings with our stop loss. So as you can see, by the time we get into September here, our stop loss has moved up underneath this bar, and we'd have no more risk on this trade, which is always a good place to be. All right, so we'll keep moving along. Now, I'm not really covering this part of the market, but our students would have had some fun trading on the way up in the latter part of the year. I can now show you my stop loss moving up to this next swing, and then again this next swing. So we're now in profit on that trade, and we're heading up into the end of the year there, okay, with our stop loss nicely placed, all right, in there. Okay, so I'll leave that chart there. That's where we've come now into. This is like the 12th of January. Had a bit of a top there, and the market has dropped away, and that would have our students on their toes waiting for a reaction and measuring the reaction and the ranges, etc., waiting for an opportunity to arise. And there it is. Okay, so a lot of our students would get in there. Whether they took the June long-term trade or not, they certainly, after us talking about this market, would have been waiting for this opportunity here and would have entered at the top of this bar here as we broke up through. So if I take us back inside for a second, I'll just show you where we're at. Okay, so that's our trade 2. We're using a weekly swing. These are now daily swings that are highlighted, but this trade is using a weekly swing for its targets. And as you can see, we've got a target up there of 168. Okay, we'll head back outside All right, and we'll follow. Now, as the market moves up, we get more and more opportunities showing themselves. Here's another one, okay? And I'll just bring you inside again. This would be trade number 3 if we counted that August trade at the start as trade number 1. Okay, we've got an opportunity now to get long again. Got a target there of 155. Let's watch this market as it moves up. And there we go. So if I head back inside, I'll just keep jumping from out there in our software back in here just to show you the results. So that's trade 3, which has completed. And as you can see, it's taken 2 days to reach its target. So we're happy with that. All right, we're just using a milestones for our reward to risk ratio. So we don't, for some of these trades, have to calculate the actual cents and ticks involved. I'm just going to use a $5,000 account here just because I think most of you will have at least that in your trading account. We look to risk only 5% of that account. So each trade I will accept a risk of $250. Of course, this ended up being a 2-to-1 reward to risk ratio. So the reward was $500 in 2 trading days. Okay, cool. All right, we'll head back out there. That's trade 3 locked in. And off we go. All right, we've got another opportunity here. Okay, so every time we have a reaction, depending on the ranges and the milestones, our students will be looking to take advantage. And they would have got in there, okay, into trade 4. I'll just show you it inside. Okay, there's the setup. We're in by 33% there. We're looking for 100% there at 157. We'll just go back outside and follow this through. And at that point there, with that nice big bar there, you'll see that we've hit our target. Again, 4 days, 4 trading days, and we've achieved our target there. Once again, it was just a 2-to-1 reward to risk ratio. Same risk as always, another reward of $500, and only took 4 trading days. So as you can see, that trade 1 is it. Trade 1 and trade 2 are just ticking along in the background. Meanwhile, we're picking up little trades along the way and just rewarding ourselves while we watch and follow our bigger trades. So we'll head back out, and these setups are coming thick and fast. There's another one there. Straight away, we only just exited one trade and now we're looking to get into another. These are daily bar charts. Okay, so yes, it is happening quite quickly, but we're not intraday trading. So we're not stuck in front of the screen all day long. We're just checking our charts at the end of each day after work or, university or wherever you've been all day. Okay, so we'll head back inside. That was our trade 5 setup. Okay, and off we went. Because we call this a double bottom here, we would expect a larger profit target there. So we've gone up to 200% there. All right, achieved our aim once more. So we can just run through that for us. This time we got a 5-to-1 reward to risk ratio. Okay, which is fantastic to see. Same risk again, same account. I haven't added our rewards to the base of the account there. I've just kept it at $5,000 in case some students took one trade and not another. We'll just keep that flat there. But obviously, as that grows, your risk would grow and your reward would grow. But we got $1,250 in that short space of time, 9 trading days that time. Okay, so we'd be happy with that. So we'll head back out. All right, we'll just see how that played out nicely. Okay, all right, so market looking nice and strong. We're into sort of mid-February now, and now we've seen just a small little swing in here due to that outside bar, we call it. And then the market heads down. That was quite a big bar there, so it'd be difficult to enter at the top of it with our stop all the way down there. But luckily the gods have given us a little inside bar there to play with, and that way we can enter at the breaking of that bar instead of this bar up here. I'll just show you inside. And there it is. There's our opportunity above the inside bar, and we're looking for that 100% target up there. Okay, and let's go back outside and watch it play out. Market moving around. Okay, now what we've got here, you'll notice that we've got up to around 170. Okay, if we go back to our previous target, it was at 167. All right, so that early target from trade 1 and trade 2, where we looked at the bigger ranges, we were thinking about a target of around 167, which would be across here. So if I just roll a line for us, there's 167. Now, we have surpassed that, okay, but that allows us to, or at least makes us think we've got to be a little bit more cautious here, okay? So we're still taking trades because the market can always move a lot further than we first thought. We've got our setup, and if I take you back inside, we've come back down through our stop loss down here, so we would have been stopped out, but that's our profit target. One of our rules, if I just grab my tool here, is that when we reach, see, we've got 33%, we're trying to get in before that if we can, but our next rule is at 50% we protect our trade. So as we've touched 50% there, our trade would have then moved, our stop loss would have then moved to break even above this bar. So we still would have got stopped out on this bar here, but we would have been stopped out at break even instead of a loss below there, which obviously would have happened if we'd left our stop down there, okay, as the bar goes through. All right, so if we head back inside, I'll just show you that finish there. We've hit 50% around there. We've got past our bigger target that we were looking at towards the end of last year and going into trade 2. And if we just pop down, we'll see that it was a potential 3-to-1 reward to risk, but we actually ended up with 0. No gain, no loss. Okay, so all good, and that all took place in 4 days. All right, so I just want to take you back now to trade 2, which has been ticking along in the background the whole time. We used this weekly swing and up it went, and we've hit that target in the meantime. While we were taking all these little trades, trade 2 has reached its destination. And this one we can work out the cent value because we didn't really have too many milestones to work on there. So that was our reward, 2,369 cents. Our risk was 376 cents, a 6-to-1 reward to risk ratio. And I'll always round that down. Okay, I think it was 6.5, but I'll always round that down. Okay, and that brings in $1,500, but obviously over a longer period of time for us. Yeah, and as you can see, we were starting to reach, there was our initial target there, and then we put in some more milestones that told us around here could be a place to be cautious and exit some long trades. As you can see, that's exactly what we did. If we look at trade one, that initial trade that's been trailing the swings all the way up, and we managed 5,387 cents. The risk was only 171. That's a 31-to-1 reward to risk ratio there. Okay, just ticking away in the background. So, if you're like me, you like sort of a long-term trade bubbling away, accruing capital, and then I like to take smaller, shorter time frame trades in the meantime, just so I can grow my account while this is taking place. That reward in the end was $7,750, but it took half a year. Okay, so that would be too long for some people and perfect for others. I like to have a foot in both camps where this is ticking along long term. That's okay. Leave it in the drawer and keep an eye on it. But I also like to be taking trades in the meantime where I can see my account growing week to week. Okay, so best of both worlds, I guess you could say. And I'll just take you back outside. Okay, this is where let's pop back to our initial chart. That's our August trade number one, and we were just trailing underneath these swings. And if we just flow up there was trade number 2, 3, 4. And again, this stop loss just kept moving behind us. Separate to these trades, there was 5. There's another swing in there. And we keep going up, and 6 was a break even at the top. Okay, and the pattern that gave us that top there, our students would be familiar with, and we'd hit our profit target for trade number 1. So we're happy all round there. 5 gains and 1 break even. Okay, on this Rio Tinto market, and that's where we are as of yesterday. So hopefully that'll show you how we operate, a nice safely manner. So just to summarize quickly, we had 6 long trades on Rio Tinto. Trade 1 was a weekly trade, which took half a year to play out. Okay, that's because we've taken our profits. Who's to say that it wouldn't continue? But we had reasons to get out. We've got a 31-to-1 reward to risk ratio. And, being in a trade for half a year might suit you if you're really busy at work or at home with the family, or you're a FIFO worker where you're working 3 weeks on and 1 week off, etc. That might suit you. Okay, it certainly suits me to have that in the background. Then we used a weekly swing for trade 2. Didn't take so long. Okay, we got a 6-to-1 reward to risk ratio. And again, $1,500 there on top of our 7750 for trade 1. And they were based around weekly swing charts, okay, which are so much more manageable for people who are too busy to sit in front of a screen. Who wants to sit in front of a screen really all day and all night? And then we turned our attention to just end of day trading, where we check our market for maybe 10-15 minutes at the end of each day to see if there was an opportunity there. And trade 3 brought in a 2-to-1 reward to risk ratio at $500, as did trade 4. Okay, same results. And you're in and out in a few days, within a week there. So smaller results, but less time. And as I said before, it's just great having a foot in both camps. Trade 5, starting to stretch out now, 9 trading days, but you're getting a 5-to-1 reward there. Okay, and which shows in the result. And then trade 6, which can often happen at the end of the move, we ended up at a break even. And often you'll get a loss on the last trade of a move. At some point, that trend has to change for a while. And that was 4 trading days at a 3-to-1, but we didn't lose any capital there. Our stop loss looked after us. David Bowden's rules that he teaches us protected us there where we move our stop up to break even. That's what we base our teaching on, is David's given us these rules. Our profit target stops us becoming greedy, and our stop loss prevents us from trading with fear, because we know we can get out of the market. It's preset when we take the trade, and if we're wrong about the trade, our stop loss will get us out before we feel too much pain. All right. So there you have it, 5 wins, which from a $5,000 account, which we didn't add to. We didn't add our profits to that account, so that should be bigger and would be bigger in real life. And you may have a bigger trading account with more capital in it, and thus that number would be bigger. Again, we had 1 break even, which is obviously no win, no gain or loss there, and no losses. So 0 in that column, which is always nice. Okay, so that's us trading with the trend and letting the market tell us which way to trade. If you'd like to know how you can replicate these trades, follow the link below to find out more about the Active Trader program. It's the course that will teach you how to consistently and hopefully you can see safely build up your trading account as the market moves. Okay, hope to see you very soon. Thank you very much, guys, and good luck with your trading.